Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and my personal passion, which is mechanical trading systems, our 21 SPY and ES mean reversion systems. We also have 12 volatility systems, and of course, our very famous KISS trend systems. By the way, we just launched a new addition to that, the high performance. Here's the KISS systems are in the systems section. Here's the standard KISS systems. By the way, here's some new longs today. Google, NVIDIA, GDX, and of course these other instruments have been long. Last week, the major indexes, the S&P and the NASDAQ went back long with stops at that Monday low. And of course, here's the high performance you can see. Again, this is free at the moment, so you can go and peruse there. Let's take a look at that. So here's the high performance. Again, you have a table, and there's about 20 something stocks here. There's smaller time frames. You can see 78 minute, 30 minute, 130 minute, stuff like that. So they're a little bit more active. They're not that much more active, but these have performance stats generally 2 to 3 fold better than the standard KISS. They send out trade notifications via SMS text messaging. There's an SMS area here where you can put your number. As an example, here's my phone messages. These are an example of some of the alerts that the system will automatically send intraday on those high performance KISS systems. All right, pretty excited. We finally got this launched in beta form. I know a lot of you already have a lot of our users looking at it. If you haven't done so, you should take a look. Anyway, let's go ahead and get back to this newsletter video at hand. It is Monday, August 12th. This is our backend recorder for our website subscription service. If you're on YouTube, it's a reason why you should subscribe, so you can get access to these systems and trades and stuff like that. Anyway, I'm going to get this recorded started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, August 12th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Again, opening statement first off. Then I'm going to talk about these systems. On the weekend, we launched the new high performance systems. You're free to go look at those. They're in beta at the moment. And so I'm going to cover that. Also talk about the volatility systems. So that's another 12 systems I'm looking to bring on board the website as well. Quite honestly, we're going to have enough systems here with the 21 mean reversion systems, the volatility systems, all the KISS systems. I mean, quite honestly, may almost eventually make sense to launch or spin off the Breakpoint trade systems to their own website. But again, that's not doing that anytime in the near future, but just a thought. We'll move on to the general market analysis. We'll look at a few indicators like the VIX. We'll look at the bond market. We'll review just a few major sectors. We'll review the currencies, US dollar, Japanese yen, Bitcoin, commodities, precious metals, GDX, gold miners. We'll review a few trade setups. I didn't add much new here. Again, just to recap, as you know, Steve did the extensive weekend newsletter. By the way, if you're on YouTube, Steve doesn't post on YouTube, so you wouldn't have seen that. Another reason to subscribe. But anyway, he did the extensive weekend newsletter, and I'll be recovering quite a few of those charts for those of you who may not have looked at the weekend newsletter, or if you're just on YouTube. And be aware, Steve will be going out of town. He'll be going to Europe. He'll be leaving on August 17th, and he'll be back on September 4th. So I'm going to be doing all the newsletters, there for about 3 weeks. Definitely, by the time he gets back, I'll be definitely ready for a break. Again, on the weekend, like I said, we launched these high performance beta KISS systems. Many of you who are active on the trading community have already seen those. I'm going to cover a little bit of that here in the newsletter, but I am thinking about doing a live webinar tomorrow, guys. If I do that, it's going to be sometime after the market close, and I will record it for those who can attend. All right, so just giving you a heads up on that. As far as the market, no technical changes today from what Steve discussed on the weekend. It was pretty much a choppy sideways day. Breadth-wise was 2-to-1 negative, with most of the sectors were down except for large cap big cap tech stocks, and energy. Some news items: CPI and PPI inflation data on Tuesday and Wednesday. Those could be market movers. The CPI is more important generally than the PPI, so let's see how that comes in. That's on Wednesday. Unfortunately, geopolitical risk can affect the market here. Middle East, Iran, Israel. Is Iran going to attack Israel? Everyone's expecting that. And again, guys, unfortunately, that's a wild card that will affect the market. So, for example, today in the morning, the S&P pulled back 40 points in 5 minutes due to a news item about Iran, Israel. So, if if or when Iran attacks, expect maybe a nice sharp quick pullback on the market. Just be aware of that. Nice rally in many of the commodities today, especially crude oil. Some of the energy names, crude oil up 4.2%. Precious metals had a great day. And as far as the market, like I said, there's many possibilities, guys. No one can tell you with 100% certainty what the market does. If you follow any gurus and they tell you they know exactly what's going to happen, I suggest unfollowing them. The best analyst out there will tell you there's always options. We never know 100% what can happen. There are very valid wave counts here. One, the bearish view is that we're simply in a fourth wave bounce. This is going to fail. We're going to come down to a new low in a wave 5. Okay, very valid count. And the other count suggests that we already put in the low, which we favor. Okay, doesn't mean we're right, but we favor that. And then the market's eventually going to work higher to a new high. That said, even if the low's in, I am expecting some kind of pullback soon for at least a higher low. But let's go ahead and move on. Let's talk about the KISS systems. So first image below, item number 2, this is right from the website, the KISS systems. Again, this is just the standard. But now when you go there, guys, you'll see high performance beta and SMS. So SMS, you simply go there, put your phone number in, and you'll receive SMS notifications for the high performance. But here's the standard KISS systems. Again, a lot of these started going back long last week. For example, the triple Qs, NASDAQ, SPY, SSO, S&P went long last week. All right. And today you can see a few others went long: NVIDIA, Google, GDX, DIA. Now let's look at some of this high performance stuff. So image number 3. So whenever you go to the high performance tab, you'll see a table. Okay, just like there is in the standard KISS system. These are the high performance. So high performance, you can see a lot of these are not daily, they're intraday. 78-minute here for GDX. NVIDIA, there's a 30-minute. There's actually a couple different NVIDIA systems here. I'm not showing them all here. And 130-minute, various time frames. There is a couple zeros you see here. That's actually daily, right? Anyway, these systems tend to have 2 to 3 times the performance of the standard daily KISS systems. All right, so I'm hoping that they'll be able to perform like that in the future. Again, no guarantees, guys. Please realize that. And I will be modifying, redoing these as needed, and I plan to add more systems here. But again, even though these are intraday, they still don't, they're a bit more active than the current daily, but not that much, guys. All right. So they're still very easy to trade from a swing trades perspective if you work a job, stuff like that. Anyway, whenever you go to that section, you can see the stats. If you click on the stats button, you'll be taken to a new page. So let's take a look at that. So image number 4. So here's the stats on the XBI system. So whenever you click on it, it brings you to another section. So if you look here, there's 4 tabs now. It will list all the individual trades. Okay, so for example, the XBI 130-minute high performance system has 74 total trades in its history. And it'll list, so you can look at all the individual trades, and you can look at a main stats page, which I'm on here. So the main stats page looks like this: gross profit, profit factor 7.71. You can see total trades, percent profitable, which is 62% on. That's typical on the KISS systems. They tend to have 60 to 70% winning trades approximately. Unlike the mean reversion systems that have about 90% winning trades, trend following, you typically don't get that, which is just fine. Again, various things here. As you can see, all these different stats, even the average day in trade. So for example, for the XBI 130-minute high performance system, the average time in trades is almost about 45 days. So clearly, even though that's an intraday system, 130 minute, I mean, average hold time is about 45 days. Winners 65 days, losers 14 days. So definitely not day trading. Now at the bottom here, you can see the stats broken down by year, percent gain, number of trades per year. So take a look at XBI 130 minute. You could see average trades anywhere from 2 to 5 to 10 maximum. That was the most. This year there's been 5 trades. Max drawdown, that's where these KISS systems also benefit. You can see the max drawdown from trade entry. Look at the average drawdown. Quite small. A lot of these are in the 4% range. Yeah, there's a 7% range.
And where the Fed could be going, rather, implications for September.
Sorry about that, guys. CNBC in the background. So low drawdowns, and look at if you just traditional buy and hold XBI. Look at those drawdowns, 35% on a lot of these years. That's tough to stomach. And here's the percent gain. And so generally the KISS system wins. It's up this year more than buy and hold, right? Not a lot more, 7.34% versus 9.74. But look at the drawdown for the KISS system, only 4.5%. Drawdown from the buy and hold, almost 22%. 2023, buy and hold made 7.5%. KISS system made 26.5%. 2022, the bear market, XBI buy and hold, you'd have lost about 26%. But the KISS system still managed to eke out about a 9.7% gain. So you can see just really no comparison. Again, you have all these different things. There's also a profit graph here. It shows you the profit curve, which I'm not showing here tonight. There's a chart. Let's move on. Image number 5. So remember, there's also the SMS area. So if you go there, you input your phone number. What it will do once you hit sign up, it'll send you a code to your phone. Then you got to come back to the page and enter the code, and then you should be ready to go. If you're in Europe or some other country, I'm not sure if this is it's possible that not all the SMS may not work. I don't know yet, guys, but predominantly most of our subscribers are in the US and Canada, stuff like that. Okay. The last thing about the volatility systems, guys, again, we've always planned to charge a fee to use these. The high performance is just something that comes with it. So in about a week or so, we're going to lock it down, and to use all the KISS systems will be a subscription fee. I'm going to offer a big coupon for monthly or 6 month. Again, we'll talk about that later, but just letting you know that we are eventually going to have this as a subscription service. Next, let's talk about some other systems. So here, image number 6, these are some of the volatility systems. They're not officially on the website, but I've been posting them on our community. Some of you have followed them. They're pretty cool systems. They're kind of like mean reversion, right? They're different than the SPY and ES mean reversion systems, but you can see, and I have 12 of these, but you can see some of the nice trades these have done. Here's emerging markets, had a nice long entry last week, make money, USO, gold, Google, SPY. SPY closed out last Friday, nice trade. The DIA, covering up here, that's still in open position. Goldman Sachs closed out last week for a trade, and so did Apple. I plan to add these volatility systems to the website in the future as well, maybe in the next month or so. So a lot of awesome systems here at Breakpoint Trades, nothing like it. And anyway, hope you're excited, and let's go and move back to the general market newsletter. So item number 7 shows the index sector table, what transpired today. Like I said, choppy day. You can see the Dow and Russell were down. They were the weakest, while the S&P was flat. I mean, perfectly flat. NASDAQ was up just a tad. Again, very choppy day. We did have some intraday market volatility, as I stated. The S&P pulled back 40 points on 5 minutes on that news item from Middle East. So, like I said, geopolitical news is definitely can affect the market here, and I expect it to, especially when Iran finally does attack Israel. As far as the market sectors, most were down today. Like I said, breadth was 2-to-1 negative today. The strength here you see in the energy area, XLE, oil services, and of course big cap tech, technology and semiconductor. Utilities were up as well. US dollar was flat today. Bitcoin was up slightly. Commodities mostly green here. Crude oil was the big one, up 4.2%. DBC, the index, up 1.4%. Natural gas up 2%. Remember, that continues to rally out of that falling wedge I talked about over a week ago, playing out. Copper, nice bounce, up 1.9%. A little bit of weakness here in the ags, as you can see. And precious metals, they had a good day. Gold and silver and GDX, the miners. Not surprised to see the strength there still in gold with the uncertainty, but that area continues to hold up well, and the stocks outperformed today. As far as the bond market, little pullback in the 10-year, 30-year Treasury yield. Oh, and yield curve, we've been tracking that. That's at 0.97. So it's still inverted. Finally, image number 8, this shows the economic news calendar. Really by far, again, the big ones. PPI is on Tuesday. Again, the big one, though, is CPI. Market tends to react more to that. That's on Wednesday. And, of course, like I said, any of that geopolitical news that could come out. Next, let's go and jump into the index charts. Chart number 9, here's a weekly chart of the VIX. And the reason I'm showing this is because, like I said, there's various scenarios for the market where, we've simply been in a fourth wave bounce. We're going to come back and make a new low, etc. We're in the camp that we probably put in a trade low there for now. The VIX here, as you can see, it did spike up to 65.70, which got, similar range to that 2020. So, it's the fact that the VIX spiked like that tends to support our view, but again, we'll go with whatever happens. Next, chart number 10, here's the Triple Q's KISS system. This is just the standard Triple Q KISS system. Actually, no, this is a higher performance one. So this went back long last Friday, all right? So if you're following the KISS systems on the indexes, you'd be long with it. Basically, you could see the stops right at that low from that Monday when we had that big gap down, okay? Again, we'll see if that ends up being a good trade or not. But again, it's a valid entry, and the stop is in place, risk is defined. So if the lows are in, this should be a decent entry. If this is only a fourth wave bounce and may come down again, well, it's likely to stop out. But again, the KISS system still did much better than just buy and hold because it got out back there on July 18th. So, and it got back in at lower prices than what it got out of, doing its job. Next, chart 11, here's the S&P KISS system. Again, it also went long, back long on Friday as well. And these are the higher performance ones, but the standard KISS systems for the S&P and Qs also went long on Friday. What I'm pointing to here on the moving average ribbon, guys, one reason this went back long is the KISS system is attempting to guess this as an ABC complete. And one of my tricks here is with the BPTMA Deluxe on the ribbon. You see the three waves here, down, sideways, slightly up. So red, green, red. That's a three wave, A, B, C. And it went back green, so that's why it went back long on Monday. All right, so we'll see if the lows are in, those could be good trades. We'll see. I do expect, even if the low is in, I do expect some sort of retracement soon here for a higher low. Next. Now let's move back to the standard chart. Chart number 12, here's the daily chart of the Dow. Remember that Monday on the sell-off, Dow tested that lower trend line and that demand zone where it did bounce off of. Now it's rallied up. For now, a lot of these indexes kind of have this bear flag look, right? And you're nearing resistance. And that's why I stated, even if that, I think a low is in there, I wouldn't be surprised to see a retracement soon for a higher low at least. Or the bears are right and it's a bear flag and you go right back down. Notice the 200-day moving average. If we do go back down all the way, I'd expect a test of that 200-day moving average. Next, chart number 13, here's the weekly view of the S&P. Like I said, we had bounced the previous week off that weekly demand zone, right? So now we'll see what it does into this area. Chart number 14, here's the other weekly chart. Steve discussed this on the weekend. Like I said, we either have that little wave 4 completed, or you could go lower, if the mark under the bearish scenario where we have the bear flag and make another low, that would be this other wave 4 option. Okay, and then but ultimately then you should go back to a new high in a wave 5. It is a big wedge though that's forming. Next, chart number 15, here's the daily chart we've been showing, and with that potential completed ABC WXY. If that's the case, if we've completed that, that would be a wave 4, and we'd expect eventually going back to a new high. But it can be choppy here at first, guys. Like I said, I don't expect us to straight up move. If we do come back down again, though, then I'd expect a test of that 200-day moving average. We got pretty close to it, but we didn't tag it. Next, chart number 16. Here's just a clean daily chart. Again, like I said, so far we have only 3 waves down, so that's why we potentially support that ABC WXY. So far we've rallied up just a little over that 38% fib. Again, we have the declining 20-day moving average above, we have the 50-day, and we have a downtrend. So there's quite a bit of resistance up into here. Chart number 17, here's another daily chart. Again, we bounced off that larger demand zone that last Monday. We've rallied up. Now there's an open gap up here that still could be a magnet in the short term. But sometime soon I'm expecting to pull back at least for some sort of higher low. Chart number 18, here's a half-day chart. Again, this shows that potential completed ABC, which we favor. Okay, we've had essentially a little 3-wave moves up so far. We did break above that previous high. That's a break of structure, which Steve talks about. So that sets up a new demand zone here. So again, like I said, even under the case where I think we put in a low here, sometime soon I expect a pullback. This area is your area to watch as potential big support, but that could be a pretty good pullback down to this area. Otherwise, got resistance above here, and there's a supply zone up here and your downtrend. Okay. Under the bullish count, you would have eventually a wave 2 pullback, a 3 up, 4, 5. Next, chart number 19. Here's a half-day chart. So this is the bearish count. So this has it where we're still in this wave 4. Okay, we have 3 waves up. And under this scenario, you'd come all the way down, make a new low on a wave 5, or at least a double bottom. Again, this is the one we favor right now. We favor the other one where we put in a completed an ABC, but this is still a valid count. Now this horizontal red line above this would cause an overlap, as we state here in the comments. So going above here would overlap the bottom of wave 1. Remember, guys, in your Elliott wave, wave 4s cannot overlap wave 1. So if it goes above this, that's in support. That's more of a confirmation support for the bulls, and it negates this count in particular. Chart number 20, here's a half-day chart, just kind of clean chart without a bunch of indicators. You can see there's that open gap above, which should we continue to push higher here before a pullback, I think that could be a nice area to tag. Chart number 21, here's a 2-hour view, just shows a simple zigzag, right? So if this is just an ABC up, notice this move up measures to about filling that open gap. Chart number 22 is a 30-minute chart. Remember last week, after the Monday's low, we had little 5 waves up and a diagonal, which supported a higher low, which we got, by the way. That also bounced perfectly off that 61.8 fib. And chart number 23, here's a 30-minute chart. Again, demand zone here, you got an open gap above, and supply zone up here. Chart number 24, here's the 4 time frames we like to show with our custom indicators. Really not much to say here, guys. ATR is resistance still on a lot of these, 130-minute, half-day. We're getting close to those areas, resistance. We had some resistance cycles here on the 130-minute and 78-minute, which so far is capped price at the moment. Now the 78-minute is above its ATR. Chart number 25, here's the triple Qs. This long chart, remember this trend line go back to December 2022. We got pretty close to that the previous Monday before bouncing off that 200-day moving average. We rallied up, lower high. Again, it kind of has a bear flag look, obviously, with that lower high, lower volume bounce. But so I am expecting a pullback sometime soon. Maybe this tags this broken trend line. But then we'll see if we can get a higher low on the next pullback. Chart number 26, here's another daily chart. Again, we bounced out the demand zone the previous week. There is an open gap up here, resistance area. We'll see if we can make it into that before pulling back. Chart 27, here's the weekly view. Remember last week we bounced right off that 50-week moving average. By the way, this broken uptrend line from the October lows of last year, that's potential resistance. Chart 28, here's a 2-hour view. Again, break in structure here. This sets up a demand zone. So this is a big support down here, guys. Again, and you got a supply zone up here. Also a little open gap. Chart 29, 2-hour view, showing you how this downtrend line, we're getting closer to that. You can see on the downside, those bearish moving average pensive squeezes provided nice short opportunities. Okay, squeeze in here again, but to me it kind of has the look here usually when you get 3 of these in a row, a lot of times this last one you've already bottomed, but we'll see. Chart 30, here's a 60-minute chart, just showing the chart with the downtrend line, that open gap above. Chart 31, here's a 30-minute view with some of the fibs. And yet another 30-minute chart shows you the demand zone, supply zone, so we're kind of basically in the middle there between the two. And chart 33, here's the 4 time frames. Again, we're above the ATR in the 78-minute. We're still below it on these lower time frames. Chart 34, here's IWM. I should have redrawn this chart. Apologize for that, guys. Again, this gave you a great trade out of this coil, but if you didn't take profits on that divergent high, it gave it all back, came back into that previous demand zone, bounced near the 200-day moving average. Now it's just chopping around here. Got the major moving averages like the 50-day above and the declining 9 EMA. Chart 35, here's the 2-hour view. And let's go ahead and move on. So there you go, guys. That does it for the major indexes. So we'll see what happens here this week. Again, CPI, PPI, geopolitical, etc. Chart 37, here's the VIX. Remember, I already discussed this. The VIX had spiked into that 66 area the previous Monday. And then it came back inside its Bollinger Bands right here. So that was a VIX Bollinger Band buy signal, which so far has given a nice trade. Chart 38, here's a 60-minute chart. That said, the VIX has wedged down into a little support zone, a little demand zone. So if the VIX bounces here, that would support a little pullback in the market here fairly soon. Let's see if we can get a higher low on that pullback. And chart 39, here's a 30-minute view. Guys, the VIX loves to fill gaps, even more so than the indexes. So always watch those gaps. You can see there was an open gap there, which we filled today. Chart 40, here's the VIX VXV ratio. Remember I was showing how this had spiked way up to crazy levels that previous Monday, typically indicative of trade bottoms. And you can see so far that gave you a nice trade. Chart 41, here's the S&P versus SVXY. That's the inverse VIX ETF. And SVXY tends to lead. You can see it here. So SVXY, notice that the market spiked down, but the SVXY did not. So it was kind of giving you a little early warning that, hey, this dip will likely be bought, and it was. Chart 42, here's the breadth indicators, the NAMO, McClellan Oscillator, the NIMO. Remember, they were outside their lower Bollinger Bands last Monday, and they bounced back. This also, though, shows you the negative breadth. These are still negative, and you can see they were down quite a bit today, despite the S&P and the NASDAQ being up. Moving on to the bond market, chart 43, here's high yield corporate. They tend to lead, and this has held up very well. It's just off the highs, so that's a positive for the market. Chart 44, here's TLT weekly. Remember this beautiful coil I was showing a few weeks ago, which broke out. Pulled back last week, obviously, a little bounce back today. Still looks higher to me. Chart 45, TMF. This is the triple in long ETF or TLT. This was our long idea we put out a couple weeks back on this coil, which gave you a great trade. I hope you took profits on that first good rally. Gave you about a 13% move from that coil break. Pulled back. I said last week it looked lower risk buy in that support zone, and so far it's bounced off of it. Chart 46, here's the 10-year treasury yield. Remember, it broke from that coil the previous week, but so far finding support at that 200-week moving average. Chart 47, here's the daily chart. We had that meltdown the previous week, bounced up to the 9 EMA, pulling back a little bit. The RSI 14 got oversold last Monday, which rarely gets oversold on the 10-year. You can see the last time that was a major bottom in December, and that might have been a low there too last Monday. Chart 48, here's the weekly view of the 10-year, the chart that I projected that pullback months ago, which we got. What you have here is three-wave pullback so far. Okay, once that C is confirmed, expect maybe another rally up. This is big support here, guys. I don't expect the 10-year to go below this level. Okay. Moving on to some of the market sectors. Mainly today, like I said, what bounced was big cap tech. XLK was up today a little bit. Now this broken up trend line up here, that's resistance. Chart 50, here's the semiconductors. They've also were up today into this little gap. Chart 51, banks. Again, most other sectors were down. Here's banks. Like I said, kind of has a little bear flag look to it, like it needs a decline here soon. Chart 52, transports, bounced off the demand zone the previous week, but stalling at that broken trend line resistance now. Chart 53, utilities, they continue to be quite strong. So that's an area to focus on for some individual stocks. Chart 54, healthcare. Last week bounced off that uptrend channel. Right now we're in the middle of the channel. Another sector that was strong today was energy, XLE. Remember the previous week bounced off that demand zone. Next, chart 56, here's the Japanese Nikkei index. Again, last Monday when the market dumped, the Nikkei was in meltdown mode. You can see that here. Kind of looks like a 1987 crash. Anyway, it's bounced back, but so far only back to the 9 EMA, which I said would have been a mean reversion move. Chart 57, FXI, that's the Chinese market ETF. It was down into that demand zone I mentioned last week. So far, it's bounced off of that. Next, moving on to commodities. Chart 58, DBC. Remember, perfect bounce off that major support. That support from the December lows. Double bottom, rallied up, cleared the 9 EMA. Now it's above the 20. Look at the RSI divergence you had there. Really nice RSI positive divergence. The moving averages were really wide, so was to be expected to have a nice bounce. Commodities had a good day generally. Here's the weekly chart. DBC essentially bounced off that 200-week moving average, the bottom of this coil pattern. Chart 60, here's crude oil. This was the standout in the commodities today, up 4.2%. Held that demand zone and bounced off that lower coil trend line. Chart 61, natural gas also continues to play out. Remember, I was talking about this little wedge pattern with MACD divergence the previous week. Said it was a low risk trade. It's given a nice trade so far, percentage wise. Chart 62, Boyle, that's the leveraged ETF, so that's what I've played. And here's the 2-hour chart. You can see that little wedge there. Gave a great trade so far, but I've already taken some profits on this. Chart 64, copper, Dr. Copper, finally bouncing a little bit near that long uptrend line there. It's had a heck of a correction here, potential ABC. This last low had some nice RSI divergence, so getting a little bounce. Chart 65, CPER, that's the copper ETN, way to play it. You could see it was in a demand zone, got into that gap. So to me, it was a lower risk area. I bought a little bit more this last week. Haven't sold mine yet on this bounce. Chart 66, corn, been showing this. What I've liked about corn here is that you got a nice MACD divergence here. I really like MACD divergence. You got a little wedge, RSI divergence. You had a nice reversal today. So to me, this looks like a low risk long with a stop right at today's lows. Moving on, Bitcoin, here's the weekly view. Remember, the previous week tagged that previous resistance, which became support. We bounced right off of that. Chart 68, there's the other view. We had that nice pullback into that 5-wave move up. The bounce So far, stalled around that 61.8 fib. Now we'll see if it can form a higher low. Chart 69 US dollar, essentially a flat day. The previous week bounced off that demand support zone. Chart 70, here's the weekly view. So there's a couple options here. This is either a ABCDE coil. If it's that, then we bounced off the D here. We're going to make a lower high, wave E, and then eventually break down. The more bearish view is this. We're starting this wave 3 decline. Both counts here, guys, point to lower prices on the dollar. Okay. The triangle in blue would suggest a little bounce first is a wave E, but on the other scenario, you go right down in 3. So the dollar, again, under both counts, should eventually work lower. Next, chart 71, here's the Japanese yen. Remember, I've been stalking this. Been stalking this for the last couple of months, was looking for a good rally, and we got it. You can see that big rally up on the yen. Pulling back, but it kind of has a flag look to it, doesn't it? Chart 72, there's the weekly view. That was what I played, was FXY, and gave a nice trade. This broken weekly trend line, by the way, is now potentially support. Moving on to precious metals, chart 73, gold, nice day, up 1.25%, still in this overall same pattern. Chart 74, GLD, one of the ETFs. Remember, it's held that demand zone, that higher demand zone, rallied up. This kind of has a coil pattern. Looks like it wants to make another high. Chart 75, silver. Remember, silver so far has had an ABC correction after that big breakout earlier this year, which I spotted. To me, this is now big support. To me, silver looks like a low risk long here at the stop, right around that 26.50 low. Chart 76, there's the weekly chart. You can see this coil pattern, ABCDE breakout. We back tested it twice now. That's big support. And chart 77, here's the monthly. Remember, we broke out of this monthly coil. We're still holding out of the coil. If this chart plays out, I'm expecting silver to eventually go up to these other upper levels, guys. That's quite far high, much higher. Chart 78, GDX, the miners, bouncing back today. Here I added a downtrend line to monitor. Couple individual names, chart 79, IM Gold. Big breakout here. I didn't check, but probably news or earnings, but big volume breakout there. And IAG has been very strong. Here's one that looks interesting, kind of a cup and handle. This is SA, Seabridge Gold, kind of a cup and handle look to it. Let's look at some individual stocks, some of the big cap tech stocks. Here's NVIDIA. Remember, NVIDIA got into this demand zone last Monday where it bounced off of. That was a good area to take some position in NVIDIA if you're looking to do so. By the way, you also got a little trend line break on this RSI, which is a valid long trigger. Chart 82, here's Amazon. Remember, bounced off that demand zone the previous week. Now, it's going to run into some issues here at these moving averages. Chart 82, AMD. Bounced off that demand zone last week. I thought it was a lower risk entry. Slight poke here out of the steep downtrend line at the moment. Chart 84, Apple, Crapple. That little head and shoulder pattern played out, but it did bounce off the demand zone. Now it's come up into here, which is potentially some resistance. All right, some other items. KVUE was a long idea we had on the list, which if any of you are long this, had a nice gap last week. I wasn't personally long, but congrats if you were. Chart 86, YY was a long idea. It was on the watch list for quite a while. Finally started breaking out and following through here. Chart 87, NEE. This is a utility. We gave it as a long idea a couple weeks ago on this little coil. And it basically tested those highs. Hopefully took some profits there. But right now it appears to be flagging. And let's see if this can now launch again. Kind of a cup and handle look to it. All right, guys. That'll do it on the market. We will see what happens tomorrow. A quick check on futures. ES futures are up about 5 points this evening. And gold futures are up 10. All right. Have a wonderful evening. Take care, and thanks for all your support.